This is going to be a video over March the 2nd. So overall, you had a double bottom on the open, and you can basically call it a trend from the open day. We had a bull breakout, rallied, and the biggest thing I would say is while it trended, most of the day was sideways, and you can tell it was in a fairly strong trend for a good portion of the day due to the moving average. We were holding above the moving average for most of the day. So I'll start with, for stop entries, always in, it's basically the same thing. Let me just do like this first, I'm trying to organize my thoughts better. So on the open, do bulls buy here? Maybe, but again, probably going to come back to the moving average, and I don't know. I think that's just a hard buy, especially when you're breaking above this range. Bulls are probably better off waiting for a pullback, and in hindsight, this was the pullback. And if you didn't buy here, if the bulls didn't buy here, and I don't think the bears sell anywhere over here. If the bulls don't buy here, which it's understandable, do they buy above this bar? Probably not. I would wait for a pullback. So just like this bar, wait for a pullback. Most bulls will wait for something like this, and even this isn't that great. It doesn't. This looks like high probability, but when you really look at this, it's hard to say. So if you don't buy here, if you do, maybe your stop's down there, but you're forcing me to buy in the high at the top of the range. Otherwise, you wait for a strong bull bar follow through, and then you get long. So it's clearly always in long at this point. Traders, do they get out? Some will get out maybe below here or below this bar. Fairly tight channel up though. And if they did get out there, maybe they get long and get in here. And some traders could get out there, but again, this is mostly a tight trading range, forcing you to sell at the middle of the range, and you pretty much went sideways for the day. Now, I say all that because I don't think a lot of people are going to trade always in when it looks like this. I mean, you're really... Yeah, so when you have a lot of trading range price action here, a weak breakout with weak follow through, you're going to look to scalp and look to buy pullbacks to the moving average. But let me just kind of review the day as a whole. So on the first part of the day, big bull bar, follow through bar, breaking above these bars. However, you're still within the range, this trading range. So if you're buying, you got to ask yourself, where's your stop? Maybe it's down here. That's 1 times your risk. What's the probability your price is going to go up to here before it goes down to there? It's probably closer to 50-50. It's not. I don't think it's 60%. Therefore, you have to decide, do you go for twice your risk? So maybe you buy here, target up here, stop down there. I don't think that's reasonable either, which is why most traders will wait for a better stop entry. A trade that's closer to 50-50 and the risk reward's better. So not really, can you sell here? You can, but it's not a good short. Just like up here, you buying, it's not that great unless you can buy more lower quickly and scalp out like traders did here. Same thing down here, sell more higher and scalp out real quick. But you can see that's really difficult because look what happened during this bar. So traders sell, they sell more higher, and they get out break even. I don't know if that's really that good of a trade. Risk reward is difficult, so most traders are better off waiting for the pullback. Maybe they buy here, stop below the bar. Maybe, it's not a 40% trade and it's not a 60% trade, so maybe it's somewhere in the 50% area. So you buy, stop down here, maybe you got basically a 50-50 shot of a double bottom. Big bull bar, probably always in long, but just as we were probably always in long here, maybe always in short here in reverse, traders are going to be hesitant buying closes, especially with this big tail. Too much risk of some sort of, you can call it a triangle or an expanding triangle. You can call it a double top. We had a double bottom here. We have a double top here. It's kind of a breakout mode situation, although the range is pretty big. 2 legs up, however, channel up is fairly tight. It is parabolic wedge, 1, 2, 3, but weak signal bar. So plenty of traders will wait. Outside down, but forcing you to sell in the middle of the range, which is not where you want to be selling. That's where you want to be taking profits. We had a high one buy here, so traders will sell the high, betting that it's a bad buy and scalp out. Inside bar, it's call whatever you want, triangle, double bottom, breakout, pullback, double bottom. It's forcing you to buy at the top of the range. We're holding above the moving average, so maybe it's a spike, pullback, and we'll get some sort of, I'm just more curious to see if we got it, which we did, so 2 legs up. Get rid of that. So strong breakout, always in long. Follow through, always in long. 3 consecutive bull bars, probably going a little bit higher. First reversal down will fail. It's top of a channel. So you can draw the channel if you want. And you can kind of tell it's parabolic because for the, here's the channel line. We'll break it above the channel line. Sideways for the first hour and a half, so you have to expect, just like this day, sideways, bear breakout, may go sideways. So the same thing can happen here. First reversal down is probably going to fail, probably buyers below. Second leg up. And, again, it's hard to hold long and trail a stop when you have a day like this because traders are selling new highs and buying pullbacks. So double bottom, you call it a triangle. 1, 2, 3, 1, 2, 3. Forcing you to buy around the middle. Haven't touched the moving average, so this could be a trap, but it's a reasonable buy. Stop down here. And, there you go. We'll break out, follow through, probably going a little bit higher, but again, not that strong a breakout. Possible final flag here. Another push up. And, at some point, everybody wants to buy the moving average. And while this is strong and we have a channel, we know that channels evolve into trading ranges. And we know that most days have a 99.99% chance of touching the moving average. So do you really want to be long up here when we hadn't touched the moving average? We did here, but not over here. The odds are just really high we're going to touch the moving average. And, here. So we keep getting stop entries really close to the moving average. Here. And now you have the best looking stop entry that's the closest to the moving average. And eventually one of these is going to fail. So you have to ask yourself, this is probably a bad stop entry buy. And although it worked, it went up a little bit. You couldn't even get 1 times your risk. And outside down went below the range, but probably buyers below, scaling in lower. Second leg down, maybe surprise. Second leg, bulls are still buying, and 3 pushes down. It's a wedge, testing back into this range, and we went sideways for the rest of the day. So it's a trading range, and although you look at the day and it is follow through, let me start over. Although you look at the day and it's a trend, it doesn't look like it. Doesn't look like a trend here. We had a breakout, and if you really just ignore, here's the day. Here's part of the day. Just a lot of trading range price action. And here's the other portion of the day. A lot of trading range price action. So if you take out these 3 or 4 big bull bars, it's just overlapping. And, again, look at the day. This is from 10:20 a.m. Central Time to the close. So you really had 3 days. You really had 3 bars that were strong trend bars, and the rest were, and even those bars were overlapping. So this bar overlapped a lot here. This bar overlapped a good portion of this bar. So not really that strong of a breakout. Limit orders, everything was a limit order. Traders would sell here, scale in higher, sell this close, scale in higher. They'd buy this low, they'd buy this close down here. I wouldn't focus on that. I'd focus on mainly stop entries. They'd buy this low, scale in, this low, scale in, sell above here, sell higher, buy this low, buy more lower here, buy more lower. Small micro channel, probably sell here, scale in higher. They'd also buy this low. When below the moving average, they'd buy down here, sell up here. And it's a lot of work. So, hope this video helps.